I think there'll primarily be two major influences that will impact the multi-residential sector. One will be the bond market due to the yield curve inversion as the long-term interest rates are going down. The second would be geopolitics, and primarily it will be pertaining to the capital inflow into North American communities.
I think interest rates will be a big impact. I think if you look at GDP growth right now, it's very strong relative to consensus forecasts. However, capital investment continues to shrink and contract. I think consumer confidence is definitely petering out as well, and so there's a concern there. I think the rhetoric in the U.S. around trade wars is certainly weighing, or potentially could weigh on the economy. So we could roll into a recession over the course of next year. I think the Bank of Canada has that on its horizon. I think we'll continue to see very aggressive movements and decreasing interest rates. I think we'll be lockstep with the Feds in the U.S. And I think as long as spreads peter out and standardize, we should see cap rates continue to compress in the market as well. So we think overall valuations will be positive. We could see some revenue softening depending on what's happening in the economy if we get into a recession. But I think overall, from a valuation perspective, we should be in a positive spot.
I think that, the wild card could be interest rates, but interest rates aside, I would say that technology, it's not a week that goes by that I don't have a call from a technology provider who's looking to implement some new software or physical technology within our buildings to improve operations and drive either return or save money on our expenses. So I'd say the increased use of technology into building systems and the real estate industry as a whole will be the greatest demand driver.
I see two major impacts coming up in 2020 to keep an eye on. The first is political, because we have elections, first in Canada and subsequently in the United States. And there's just certainly an equal chance that there'll be a highly positive improvement in terms of the ladder of financial supports and incentives to address the housing market, because both countries are beginning to feel the pains of affordability crunch. So regardless of who is elected, I think that there is at least a 50-50 chance that we'll see the development of new programs to address the construction and affordability characteristics of housing, whether that is new loan assistance, if that's buy down of development charges, but I do expect it in both countries. The second influence is obviously interest rates, and at present, the prognosticators think that interest rates are more likely to decrease than increase, and I would say that effect is somewhat neutral, because obviously if long-term rates decline, it makes the purchase market more affordable, but it also makes it easier to facilitate the financing of new purpose-built apartments as well. So those are the two elements that I expect to see have the largest influence. I don't see any other major precipitators of population shifts or geographic relocations, so those would be the two I'd focus on.